Why fixed index annuity? Let's understand this. Fixed index annuities can be better for longer-term investors who want to preserve their savings and stretch them over their retirement years. They offer several index and fixed accounts options, and you can choose to change indexes or move to fixed accounts as often as once a year. Now, fixed annuities are better if you have a shorter timeline for needing your money and want to be sure your savings grow at least somewhat. Just like a bank CD. With my experiences in attending numerous seminars covering retirement planning, most financial professionals were advocating highly on fixed index annuity. Let's find out from this video. Fixed index annuity offers several benefits, such as the opportunity for higher rate of return, in case the associated index performs well. No matter how the market performs, your minimum interest rate of return is guaranteed. Another advantage of fixed indexed annuities is their protection against market volatility. Since the annuity's value is linked to an underlying index, it is not subject to the sudden drops in value that can occur in stocks and mutual funds. This provides annuity holders with peace of mind that their investments are secure. They also tend to have more complex features and riders that can be difficult to understand. Is this true? Let's find out. The pros and cons of index annuities. The world of annuities can be very confusing to most people. I personally do not blame that confusion on those who are investigating this great addition to their portfolios. I blame the professionals that make it confusing to those that are seeking the information. Annuities, especially fixed indexed annuities, are amazingly easy to understand. There are approximately 200 different annuity companies in the marketplace. Each one of those annuity companies have anywhere from 5 to 20 different annuities, and each of those annuities can come with different subcategories and options. So, on the low end, that is 1,000 different annuities that you can choose from. How are you supposed to know which annuity is right for you? To start, this is why it's important that you deal with an annuity expert. Meaning, someone who only deals in annuities and safe money products. I know a lot about these different areas, but the rules change so often that I could never be proficient in all of them. I am an advocate of having a separate person in each one of these categories who is an expert. Today, I would like to give you a list of the pros and cons of index annuities so you will know for yourself what is hype and what is the actual truth about these products. Pros of index annuity. 1. No active management or repetitive meetings with financial planners. 1. Automatic pilot. 1. Set it and forget it. 1. This feature helps with personal or family concerns of cognitive decline in elder years. 1. Zero fees. 1. A great amount of your hard-earned money gets eaten up with active management fees and fund fees. 1. Backed by huge insurance companies that have multiple layers of safety that protects your money, even in the event of a default. 1. Life insurance companies have stood the test of time through devastating world wars, financial recessions and depressions, sweeping epidemics and pandemics, earthquakes, fires, inflation, and deflation. 1. They should not be confused with P&C, or property and casualty insurance companies. 1. Life insurance companies do not just close their doors and go out of business declaring all policies null and void. 1. It just does not happen. 1. Potential for market-like returns without the risk of having your money invested directly in the market. 1. Never lose money due to a market downturn. 1. Your money is completely protected from market volatility, and your gains are always locked in. Historically, FIAs have had better returns than long-term government bonds. 1. Considering bond yields are at a historic low, this is very important point to consider. 1. Avoids probate with the naming of a direct beneficiary. 1. Tax deferred. 1. Can be set up to provide lifetime income for you and your spouse, and possible long-term care benefits with an added rider. Normally comes with a small fee depending on the terms. 1. However, there are zero fee options. 1. 100% of your money can become liquid in the event of a death, a terminal illness diagnosis, or confinement to a long-term care facility. 1. Access to a portion of your money during your agreement that can be used for emergencies or a custom-designed strategy for income. 1. 100% of your money is eligible for interest gains from day one. 1. No front-load fees and the agent's commission is paid from the annuity company's general fund. 1. Nothing comes out of your pocket. 1. Potential for an upfront bonus. 1. Some index annuities can be designed to pass a larger death benefit to loved ones if you do not qualify for traditional life insurance. Cons of index annuity. Surrender charges. An annuity agreement comes with a declining surrender schedule. The way your money is protected by the annuity company is making investments in long-term bonds that have their own surrender schedules. So, if you change your mind and decide to pull your money out of the annuity before the agreed-upon time, the annuity company must pay a surrender charge to liquidate the bond, and that gets passed on to you. 1. Limited growth. 1. Interest is credited in one of the three-way caps, spreads, and participation rates. 1. If you choose an index with a cap, there is a ceiling on how much you can earn no matter how well the index performs. 1. You are much better off sticking with a participation rate. 1. The volatility of the index you choose will directly affect the participation rate you receive. 1. For example, the S&P 500 is extremely volatile, so you will receive a lower participation rate. 1. There are many indexes to choose from, and there are several that will give you higher than a 100% participation rate. 1. Limited access. 1. Typically, you have access of up to 10% per year of the overall account value in your annuity, and that includes any gains you have made. 1. For this reason, it is vitally important to work with an expert and have a strategy to make sure this adds to your financial plan, not hinders it. In summary, there are more advantages having a fixed index annuity than disadvantages. Please comment, like and subscribe to my channel to learn more about it. Thanks for watching. Yours truly, Tony G.